But of the banks that do face the same risks as SVB, which ones are considered systemically important?
So we looked on, we essentially did a stress test of the banking sector. How many banks can actually survive an insured depositor run? So first, the first scenario we consider, imagine at each bank, 50% of uninsured depositors withdraw their money. In this case, we'll have about 190 banks being in a precarious position, meaning that the remaining value of assets is not enough to cover the face value of the insured deposit obligation. And these banks account for $300 billion. But of course, if such run become more pronounced and wider, so we did another stress test, what if 100% of uninsured depositors withdraw their money at each bank? Then we have a very different situation. We'll have almost more than 1,600 banks being essentially potentially insolvent, and they account for $5 trillion of assets. And in this group, you have some very large banks.
And so talk about some of the banks within there, although we know obviously everybody is not going to do a bank run at the same time.
So, I don't want to give specific names because the last thing I want to do on your show is start a bank run. But among the largest top 10 banks are really some large financial institutions. So there is a significant risk to the system. And of course, you could say this is somewhat of an extreme scenario, 100% of uninsured depositors withdrawing the money. But I think what really our paper tries to make a point is that because of a large increase in interest rates and how thinly capitalized banks were to start with, about 10% of the funding comes only from equity, there is a significant increase in risk of uninsured depositor runs in the US banking system. That's something regulators should really think about.